Today is Sunday, August 3rd. Welcome to the Business World Review, what you need to know. The health of the U.S. economy is currently a complex and uncertain picture, with some indicators showing strength while others raise significant red flags. Recent news highlights a number of conflicting trends, primarily driven by the effects of the government's trade policies. Here is a summary of the relevant stories. Gross Domestic Product, GDP. The U.S. economy saw a strong rebound in the second quarter of 2025, with an annualized growth rate of 3.0%. This figure reverses a 0.5% contraction from the first quarter. However, a significant portion of this growth is attributed to a sharp decrease in imports, as businesses had previously stockpiled goods in anticipation of new tariffs. Analysts warn that this trade-related boost may not be sustainable and masks underlying weaknesses. A core measure of GDP, which excludes volatile components, shows a slowdown in growth to just 1.2% in Q2, the weakest rate since late 2022. Employment. The job market shows signs of slowing. In July, U.S. employers added just 73,000 jobs, a figure well below expectations. Revisions to previous months' data also showed a reduction of hundreds of thousands of jobs. The unemployment rate ticked up to 4.2%. This slowdown is being attributed to the uncertainty caused by trade policies and a decrease in business investment. Manufacturing jobs in particular have seen consistent cuts. Inflation. Inflationary pressures appear to be re-emerging, a trend that is being linked to the new tariffs. A key inflation gauge, the core personal consumption expenditures, index rose to 2.5% in Q2. But other measures show an uptick in prices, particularly for imported goods like furniture and appliances. This has complicated the Federal Reserve's decision-making process. Federal Reserve and interest rates. The Federal Reserve has been under pressure from the president to cut interest rates. However, citing concerns about inflation and the economic uncertainty created by trade policies, the Fed has held its key rate unchanged. The central bank is waiting to see if the tariff-driven price increases will be a one-time event or lead to a more persistent rise in inflation. Business and consumer behavior. Business investment has plunged, with private investment falling at the steepest rate since the pandemic. Companies are hesitant to invest in equipment, buildings, or hiring due to the high level of policy uncertainty.